Welcome back, Mel.
Thanks.
Great to have you back.
Great to be back.
So listen, in the spring, in the summer, I tried to make a bullish case for the banks on valuation, on price to book. And at a certain point, you just have to say to yourself, maybe they are cheap, but maybe you're wrong as well to try to defend them. And, I would say early fall, I started to say, maybe things aren't as rosy for the banks.
So now they're clearly trying to cover themselves for telling people continuously throughout the entire year to continue buying the banks because they were quote unquote cheap. Guy and all of these other analysts, there are a few other gentlemen's names that I can't think of right now, have been telling people, viewers, to continue to buy these banks as they have been dipping lower and lower and lower.
This you have to ask yourself. Citibank reported in the middle of October, tangible book, give or take, was $62. Stock is trading $56 today. Goldman Sachs, same type of thing, 186 tangible book, it's trading 175. If the environment is so rosy for banks, why are two of the biggest ones trading south of tangible book? That's a problem. Now, I've thought for a while that Deutsche Bank is this generation sort of Bear Stearns Lehman wrapped up into one. And if it was a U.S. bank, we talk about it every day. But the fact that it's not, we sort of talk about it a couple times a week. Now the question is Citibank, is their exposure to Europe the reason why it's trading below tangible book? Is it systemic? My sense is Deutsche Bank makes its way into our shores at some point, but the stocks are already pricing something in.
They completely steer individuals the wrong way the entire time, while on the inside, all of these people who are on this stage here, they've already sold their shares. None of these people have any holdings in any of these companies or corporations that they continuously have been telling people to buy. 2018 had the highest year for insider selling up until quarter three. All of these people here have been continuously telling people to continue to purchase these stocks, buy them up to keep their valuations up while they go ahead and take their bags early in the end of Q3. And now they want to complain about, why the stocks are trading this level.
Is this the kind of price action where you take a look at how they trade and then you try and think of why they're trading that way, as opposed to, because if you look on the surface of things theoretically should be okay for the banks.
Should they be?
That's absolutely incorrect. Things should not be okay for the banks. The banks make money by being able to borrow cheap money and then lend it out at higher rates.
Yield curve is inverting, growth is slowing, deregulation is over.
Past year, deregulation.
But it's over. That story is over. So if you believe that
they hit their high back in January, they didn't have a fighting chance since then.
But if you believe that we're going back to 30-to-1 leverage, we're not, right? We're not doing that. Deregulation is over. XLF has made up all the ground to pre-crisis levels. It's not going higher. Banks are not going higher. It's over.
Karen,
well,
you might be the only defender of the banks.
I am a defender of the banks. I'm long the banks. And, the banks, to me, have priced in a lot of the things you're talking about, plus more. I think
This woman knows absolutely nothing about finances. Absolutely nothing.
Have priced in already a slowing economy. I think they have priced in maybe some regulation coming the other way. I think there is probably, particularly in Citi, there is some Deutsche Bank or beyond Deutsche Bank sort of credit question. But to me, I think that all of the bad news is in them already. It's a terrible tape. I understand that. But to me, it always comes down to valuation. That's what I look at first. So I look at PE here. Let's just take JP Morgan, for example, the premier. So JP Morgan, to me, is trading very cheap to the market, which banks always do, but also very, very cheap to itself. So that's really important, right? They still make money, right? These companies still make money. So that's why I want to own them. I think that they will continue to make money. The economy is not falling off a cliff. They're going to continue to make money. The last thing I kind of like, Dan hates them, right?
This is a complete lie. These people completely fabricate news and information to put people in the worst positions possible at the worst time possible. She's not telling the truth. Banks are not going to be making money if interest rates are going up and mortgage rates are going up, which also will lead to more defaults, foreclosures, bankruptcies. How are the banks going to be making money in this type of environment? This is not a healthy environment for banks. So what she's stating here is just completely false. Banks are seeing that they're going to be going through a tough time as the Federal Reserve, again, is pulling back on its balance sheets, and the banks are also pulling back on their credit, and their customers who are going to be servicing these debts don't have the money to pay them back when the interest is causing their debts to increase over time. So the banks see this. The banks have been pricing this in all year. This started back in January, February, and is continuing now. The problem is, these people know all of this. They know this, and they continue to fester this false information to put us in the worst positions possible, which I just do not agree with.
Right? So Dan's been right. Give him that.